Many entrepreneurs, when they're deciding to scale business, they want to understand how their finance looks like, and they're going to accountant. And accountant is very important person in the company. It is very important role, but this role is not responsible for your financial management. It is responsible only for your finance reporting, for salary paying, and so on. So if we're speaking about growing, about scaling, we need to go not to the accountant, but to like finance specialist, CFO, finance director, you can name it. And if you are asking your accountant strategic question, there is huge probability that your accountant can kill your business with his answers. First of all, when we are asking our accountant, is it everything okay with our business? Is our business healthy? Accountant will look at your P&L and at your profit. And based on the profit, he will make a conclusion about your business health. But sometimes profit is not relevant for the real situation. For example, if you have advance payment and your client will pay you in 60 days, in P&L it will be counted as profit, but you will not have this money in your bank account for 60 days or even more. That's why if you will rely only on the information from accountant, you can face a situation when you need to pay salaries, you remember that you have profit, but in reality you don't have those money in bank account and company can go bankrupt. And unfortunately I have faced those situations when founder just basing on the information from accountant made some decision and in the end of the day company just closed. Secondly, all the accountants, not all the, but many of the accountants, they put as the main goal for themselves to optimize the tax. And of course, taxes, it is our expense. And if we can optimize it, like in legal way, of course, it is good and it is good for business. But sometimes you can spoil the situation with tax optimization significantly higher than you can have benefit from it. For example, all the valuations are based on the EBITDA mainly. And if you optimize like 1,000 euro in taxes, you can lose several, like hundreds of thousands euro in your valuation. So that's why usually finance director, they try to capitalize some expenses, so even to increase the EBITDA. And yes, in short term you can pay higher taxes, especially if you are operating in the countries where there is like corporate income tax on not distributed profit. But in the end of the day, your business will have higher value, you will have higher reputation between your suppliers and so on. So that's why I don't tell that you don't need to optimize taxes, but you need to assess this operation from different angles. All the accountants, they making the decision about the expenses based on the size. So, and if they see, okay, we need to spend a lot of money, I don't know, thousands of euro on the salaries for new employee or on some conference or on capital expenditures, they can say, oh, this is expensive. It is not the right way of thinking. If we are speaking about the scaling, about the business management, financial management, we need to look not on the nominal value, but we need to look on the potential ROI. We need to think what return of investment I can receive from this expenditure. So if this employee, maybe his salary is 50,000 euro per month, but he helps me to generate 1 million per month, this is great ROI. But if I have employee to whom I'm paying 1,000, but he is doing nothing, this is expense of 1,000 because I don't receive any return from him. So that's why all the expenses should be considered through this angle, and usually accountants, they don't look through the returns, they look through the expenses. If you ask the accountant, do you have reporting? Accountant says, yes, we have. We have balance sheet, P&L, cash flow, everything is submitted to tax revenue service, everything is good. And yes, P&L, balance sheet, and cash flow are crucial for a business, but it is not enough. And also we need to be sure that those statements that are issued to the revenue service are relevant to the reality. So that in reality we have the same situations that is issued. I'm not talking about, I don't know, some information asymmetry. I'm talking about some like different way how we can assess same budget lines. And yes, it is not enough because we need to have management reporting. We need to consider our unit economy. We need to consider our like stock report, our cap structure, and so on. So we need to have many reports, and P&L, balance sheet, and cash flow is not enough. So this is why if we are making decision only based on the reporting that's made by accountant, we can make wrong decision. Regarding the kind of interpretation of the information, I believe the most common sense is of capitalization and of like considering the assets, because all the stock, all the intangible asset like your name, your logo and something like that is considered as asset. And if you are counting some metrics like return on asset or debt to asset ratio, you can use wrong numbers, because in reality it is not your asset, because in reality you cannot sell it, or if you sell it, it would have like huge discount. So that's why, yes, we can consider it as asset, we can assess it, and maybe we can use it as collateral for bank or something like that, but we need to have our own reporting as for manager, as for founder, where we know what is real asset, like liquid assets that we can sell, and what is like nominal assets that don't have any common with reality. And for each accountant, the main enemy is fine, like fine from state revenue service or like any government institution. And yes, it would be good if we like can pay all the taxes like when we need, if we don't have any punishments and any extra payments. But in the stress situation, stress management situation, when we have cash gap, we need to assess all situation. We need to assess all the possible solutions. And no one accountant will tell you, oh, let's pay taxes next month with some interest rate, but now we need to cover, I don't know, salaries of this supplier because of like it will have higher return, and in the end of the day we will earn more. No, all the accountants will say, no, first of all we need to pay taxes and then everything else. And yes, in 99% it is the right solution, and we need to tend to have this business that can pay tax at the date that they need and so on. But in the stress situation, in order to save our business, we need to consider all options, not only the options that the accountant provides to us. Just to sum it up, if you want to grow, you need to go to finance manager, but not to accountant. Accountant is a very responsible person and very important person for your business, but while growing, you need to have support from C-level team, including director of finance or chief financial officer. And if you don't have chief financial officer in your team, you can use fractional CFO services like John Galt Finance, and we will help you to grow. We will work together with your accountant, and together with your accountant, you will not kill your business. So we will help you to grow, not to just have good reporting for state revenue service. We have prepared a financial model template for you that you can download on our webpage absolutely for free. Also, if you will have any questions about your business, you can book also free demo call with our fractional CFO, and he will consider your business and will help you to find opportunities to grow. Also, we will keep posting videos about business reviews, about any insights, how you can improve your financial planning. So please subscribe on our YouTube channel, and we will inform you how to grow.